Well, here we go. A mega week in the stock market coming up. Your account, your broker's account, your stock market account will move this week. It will move off a lot of individual stocks that are reporting earnings, and also the big one, the Fed are going to be setting out the interest rates as well on Wednesday, and we're going to talk about that. So first of all, let's talk about some of these earnings that are coming up this week. Starting off with Monday. Obviously on the UK side of it will be closed on Monday, but on the US it's still all go. So we've got SoFi that are reporting. A lot of you guys I know are shareholders of SoFi, and we'll see what these guys report. At the moment, well, last earnings were actually really solid earnings, so we'll see if they carry on the streak of having really good earnings going forward. Arista Networks, MGM will be reporting as well. Tuesday starts getting a little bit busy once again. Uber reporting. I know a few of you guys are looking at Uber as a bit of a, not really, I wouldn't say turnaround play. Turnaround play is probably not the best way to describe it, but now that it's starting to reach a bit more of a mature state where it's not battling with like Lyft as much as in price wars, and hopefully drive up to the profitability. Pfizer, BP, Marriott, Tuesday after close. AMD. Now AMD are reporting, and I've got to say, AMD for me is one, and Nvidia is an overvalued stock, but AMD as well is ridiculously overvalued in my opinion. At the moment, it's had a bit of a drop from its 52 highs in 2021, but even now it's sitting at 106 times earnings. And if you look at the numbers, like last year AMD revenue, I actually had a bit of a look into AMD, and I looked at the revenue, and like a lot of their revenue last year was actually only propped up by an acquisition they made, and they don't have that acquisition propping them up this year. And even without that acquisition that hasn't propped them up this year, you know, the growth is going to be down, expected to be down 10% this quarter, and the next quarter it's actually forecast to be down 16%. You look at the year ago EPS was $1.13. The average estimate now is $0.56. So I'm looking at this thinking it just doesn't make sense. Like, sure, it's had a bit of a pullback at the moment, and I'm not saying like I wouldn't bet against AMD because I think it'll still be very good in the long term, but I'm looking at the valuation, and I'm looking at the growth and the profit growth that this is offering you right now, and I don't understand why it's so still survives so much at the moment. I think that, you know, when you look at some of the stocks that are being punished so far this year, you know, like some Shopify or PayPal, or in 2022, you know, a lot of them stocks were down 70+%. And I'm looking at AMD thinking, why didn't that do the same again? So we'll see what they report anyway. Ford are reporting, Starbucks are reporting. I wish I bought Starbucks when it was dipping into that like $70 range not so long ago. But hey, we've got Match Group that are reporting, Caesar that are reporting, Paycom that are reporting. On the Wednesday, we've got CVS Health. I'll probably just check out them because, as you guys know, I'm trying to start a position in Walgreens, so I'll have a look at what's going on with them guys. We've got WWE, which I believe have just been acquired, by the UFC. Perion reporting. Perion's actually a stock I did a deep dive on. I was looking at Perion. Look at this for a stock as well, by the way. Look at the performance in that. Year to date, performing very well as well. I'm interested to see what they do. Last time they seemed to sandbag guidance a little bit, so we'll be able to see if they were sandbagging guidance and actually they're going to outperform it. And also with a few things like the CEO change going on there, I wouldn't mind to pick this one up at a little bit of a cheaper valuation if I could. So I'm hoping for some strong numbers from these guys, but then they drop a bit on their earnings. So we'll see what comes out with them. SunPower reporting, Qualcomm, SolarEdge, Mercado Libre. So Mercado Libre are going to be reporting. This is a stock that I started buying. One of the stocks that I kind of wanted to buy in 2022. It went all the way from, you can see here, around February 2021 and into August 2021, and into 2022 the stock was down 65%. And during this time frame I was like, okay, I'm getting the king of e-commerce, the Amazon of e-commerce in Latin America, which is a hot growing space. And as well as that, you've got the fintech, the PayPal of Latin America as well. What a quality company. And obviously since then, it's really paid off buying them shares. The only problem is I wish my position size was probably double what it is right now. So we'll see if there's any weakness there. If there's a little bit of weakness, then obviously it could give me a bit of an opportunity to maybe pick up a few more shares that I wanted to do. So yeah, we'll see what happens with them. But I know the earnings are going to be strong. It's just how the market really takes them more than anything. And then we have the likes of Fastly that are reporting, Etsy. I believe Etsy are having a bit of a pullback at the moment. HubSpot are reporting. Datadog. Datadog is a company I would like to own. The only problem is I need it to be like half the valuation of where it is right now. So yeah, that would need a big drop. Royal Caribbean, Peloton, they've had a lot of pain, haven't they, recently? Shell, Thursday after the close. Thursday after the close is the big one. We've got the likes of Apple that are reporting. Apple can move the market massive because Apple has so many other companies that rely on it. Yeah, Apple is a big one. Shopify, obviously I own Shopify. We'll see if their numbers are starting to get a little bit stronger going forward. Blocker reporting, they've had a little bit of weakness since the short report, so it'd be good to see if they can kick back on after that short report. Coinbase, DraftKings, we'll talk about DraftKings in a few minutes, a little bit longer. Lyft and Atlassian, I know a few guys track that one. Booking.com, and then on the Thursday, AMC, Warner Brothers, Fubo TV. So the big week of earnings, and on the UK side of it as well, I think there's like, I haven't looked properly yet, but I believe like ASOS are reporting. I think Boohoo must be due an update anytime soon, so we'll be keeping an eye on them as well. But getting on to this big one, the big one for me, DraftKings. So DraftKings is volatile for earnings. You guys know DraftKings. Yeah, DraftKings is a stock that probably will move at least 10% off their earnings. I say that now, and it'll be like the most flat earnings we'll ever see. We'll see what happens. Issue that I have a little bit is it has been on a bit of a good run up. Always when you're going into earnings and you're being a bit of a good run up, you know, how much of it is priced in for good earnings, and any sign of weakness, will that potentially take the stock down? That's just something that I noticed in here. But obviously the key things, you've got revenue. Revenue is forecast to grow at 66%. This should really come in towards that 70% range realistically. It's crazy to be like, it should beat by that much, but realistically, with the Super Bowl that's been in there, and looking at the likes of Flutter that reported earnings, and looking at the likes of Entain that reported earnings, they should have a strong Super Bowl. That should lead the growth to do very well. But the focus won't be on the revenue growth. They could beat revenue growth by 5%, 10%, 15%. It won't really matter on that what that does. Everyone already has priced that in. The big thing is EPS, and as you can see here, once again, EPS is a massive range. So you've got the low side of $1 loss, you've got the high side of a loss of 0.54, and you've got on the average of 0.86. So there's nearly a 50-cent variation between the high side and the low side, which is crazy. So ideally, we need to see them bring down that, the losses and move to profitability. Obviously, a year ago, it was $1.14. So if they move to $0.86, that will be positive. If they can move into that into the 0.70 range, that'd be really, really impressive. So that's what we'll be looking out for. And then we'll be looking at the guidance. What guidance did they give? Did they hike up the revenue guidance already in the first quarter? Do they potentially say, actually, we're going to achieve profitability a little bit earlier, or are we not going to have as much losses this year? Everybody will be looking at that for the guidance point of view, and those will be the key drivers. So we'll see what happens there. But I'm hoping for good results with it being the Super Bowl. And just looking back, actually, I nearly forgot. At the bottom here, InMode actually snuck onto the most anticipated earnings releases this week. So not normally it makes a list. Obviously, you guys that maybe follow InMode or have followed InMode for the time that I followed it, which obviously I've been a shareholder in InMode for 3 years now. Most of you guys know InMode have actually already brought their earnings out. They already pre-announced them. And normally when it actually comes to the actual earnings, the shares actually drop normally when they bring their proper earnings out. So we'll see if it keeps the trend out of like doing the proper earnings and dropping, because that's what it seems to do all the time. And that leads us to the final thing this week, which is the key one on Wednesday. So on the 3rd of May, the Fed are going to be bringing out the new interest rate hikes, and we'll be seeing what they're going to do in the commentary around there. Now, obviously, we talked about this on, I think it was Friday. We talked about the leaked video that came out about Jerome Powell, and it seems like he's more than likely going to hike up interest rates. The market is forecasting hikes in the interest rates. In my opinion, it shouldn't happen. We should not have an interest rate hike this time round. We should be pausing right now and seeing if inflation keeps coming down, how it is doing, because it has been coming down rapidly, and we know that the things that are propping up inflation are more lagging indicators, and they've got to realise that if they put the hikes up now, that's not really going to be kicking in until a couple of months' time. So it would be the right decision right now to pause. I don't think they'll pause, and it'll be key to see what they say and what they suggest they're going to do going forward. I don't think they should I don't think they will come out and say that's it, we're done, even though that's what they should do. I think they'll just leave the door open once again, and it sounds like Jerome Powell is setting up the economy for a recession, and he wants to drive a recession by putting the interest rates up, and that is the big worry at the moment. And I think that if that does play out, we'll see quite a big red day on Wednesday. I think this is the one thing that I've been massively worried about as an investor, is this guy here and the Fed. I think they are setting the economy into destruction and into a recession with these crazy interest rate hikes when they don't need to happen. And I think if they do what they have normally done and what it sounds like they're going to do, and from that leaked interview from Jerome Powell, it looks like they will drive the interest rates higher, and we won't be in a good position. And this is actually, I'm more nervous for the Fed meeting on Wednesday than actually DraftKings earnings. Normally when it comes to the day or the week of DraftKings earnings, that's when I'm like, okay, let's see what they've got this time round. But I've kind of got a little bit of confidence. But I'm getting too far ahead of myself. But I've got a little bit of confidence in DraftKings this week. Whereas this, I'm just thinking this is my big worry. This is the big worry that they could drive the stock market into a collapse and the recession into the US economy when it doesn't need to. So we'll see what happens there anyway, guys. So we'll see what happens. I hope you enjoyed it anyway. Smash the like button, and I'll catch you all in a bit.